Hi, welcome to Credit Recovery. My name is George. We're gonna go ahead and be going over 4 videos to react to today about credit. Let's go ahead and jump right into it. But first, let me make sure there is no no ads
Cracked windshield.
and ads and ads. Not what I wanted. Bear with me. But yeah, today we're gonna go ahead and be reacting to how I achieved the perfect credit score. Here's the magic formula. Let's see if there is actually a magic formula. All right, let me do this. We gotta push it into that 1080, baby. All right, let's go full screen this time. All right, let's see what she has to say.
When I found out that I had an 850 FICO credit score,
What did you
it
do?
was
What did you
because
do?
I got an alert from one of the credit monitoring services that I use. Your credit health really is important. It really matters. I often tell people that having great credit is
Okay, not what we
so
came
much
for.
with hand. I feel like the world is my oyster, frankly, because I have
Okay, I see you.
and I teach people about personal finances, how to get.
So this is an ad. All right, let's jump into it. Let's see if this money coach knows what, she's saying, for lack of better words.
Get out of debt, how to save, and how to improve their credit ratings.
Hmm. One of the few people. Okay, that's more than a few people right there with the
Believe it or
850.
not, I never once tried intentionally to achieve that magic, elusive 850 credit score. I
Mm-hmm.
always was very cognizant of the fact that I wanted to be in a perfect credit scoring range, meaning anywhere from 760 to 850. But the
Mm-hmm.
monitoring alert told me that my credit score had gone up and indeed that it had hit 850. And so I was like, oh wow, let me take a look at this.
Congratulations.
So I pushed the button, I opened it up, and I remember looking at it going, oh wow, 850, that is a really rare
That's it,
thing.
girl.
I really love having a great credit score because it's afforded me a ton of financial benefits and frankly, a lot of peace of mind. I always know that I'm going to get approved for anything that I seek on the credit front or any loans. If I need a mortgage or want a mortgage, I know I can get approved for one. Whenever I want a new credit
She making the cardinal mistake thinking that credit is all you need to get approved for a mortgage. You actually need credit, income, assets, if it's required, in order for you to go ahead and get approved for a loan. So those are like the biggest three factor. Well, also debt to income. Wow. Yeah, your debt to income needs to go ahead and be in line. Sometimes your housing ratio is used. This is normally for people that are jumping from like $1,200 payment to maybe $3,000 payment. There's a ratio that gets calculated between your income. And if it goes over a certain threshold, then what happens is that then it alerts us, for us to tread it with caution when we're approving and making sure that we look for everything on the file to make sure that the income's in line, credit's in line, assets, like I went ahead and went over the LTV, so how much of a down payment is being used is being used. Sorry, let me state that part again. So when it comes to the LTV, which is the loan to value of the house, the down payment will affect that. How much are you borrowing of the value of the house is what I meant to say. Sorry for my errors, but yeah, going back to her, it's only because she has credit doesn't mean she's guaranteed to get approved for mortgage because there's other factors that go into it. So don't take that based off face value. But just kind of wanted to say that real quick. Just wanted to, and let's get back to the video.
credit card, I also know that I'm going to get approved for that if I apply
That's
for it as
true.
well. All of my credit card issuers, they're constantly increasing our credit limits. I have a credit card that has almost a $50,000 credit limit. So, if I'm honest, in my early adult life, my credit was a hot mess financially. Frankly, right after I got out of college, I had a lot of student loans. I had, in fact, even had my car repossessed when I was in college. I actually had $100,000 in credit card debt alone. I know it sounds awful, don't judge me, but it's the truth. So I'm pretty sure that my credit score was somewhere in like the 400 level. I started doing one main thing, which was paying all my bills on time, every time without exception. A little bit of a turning point in terms of me really wanting to monitor, track, and improve my credit rating. It happened after I started digging myself out of debt. And it took me 3 years to pay off my credit card debt, but I saw something immediate.
See, that is the second most important factor when it comes to your credit, or at least through Experian, because through TransUnion, Equifax, a little bit different. I don't think it's as heavily influenced. But yeah, how much you owe plays a huge role, at least through Experian and FICO when it comes to your credit score. So that's why she's seeing that 100 points drop. So she's dropping facts, she's dropping knowledge for you people.
That my credit scores jumped like almost 100 points after I finally paid off my credit card bills. So that's when I noticed, aha, there's a really strong link here between how I'm handling the debt side of the equation, specifically the credit card bills, and my credit scores. Once I first tackled the debt problem and dug myself out of debt, I saw, oh wow, this is great. I'm able to not only be debt free and have more cash flow, but I'm also able to improve my credit score in a way that I had never previously done. And so that gave me a lot of motivation and drive to constantly manage the debt side of things. If you know the kind of magic formula and what's involved, you can practice appropriate credit behaviors and make sure that you have a high FICO credit score as well, in that 760 to 850 range. And it's really about, number one, pay all your bills on time all the time, because 35% of your FICO credit score is based on your payment track record. Number two is you want to have your debts as low as possible, specifically your credit card debts. 30% of your FICO credit score is tied to your credit that you're using. And then they're going to look at things like the length of your credit history. That's 15% of your credit score. The longer and more established your credit history is, the more that tends to boost your FICO credit score. And then the final two factors, 10% each. One of those 10% is the mix of credit that's shown in your credit files. So if you have, for example, a credit card, that's a revolving form of debt. If you have an installment loan, like a student loan or an auto loan, that's another type of credit. And then if you have something like a mortgage, having those three different types of credit, those loans in your credit file, when you show that you can responsibly juggle all those types of loans, you actually get kind of brown.
Just to let you know, that is just one way. You can actually mix it up. Other types of installment loans can be personal loans, can be an ATV with an ATV loan, motorcycle loan if you want to get an RV or boat. For credit cards, you can always do a line of credit, which is different. Difference between a credit card, a line of credit, you actually can actually take out physical card and not get hit with the cash advance fee. I actually underwrote this type of loans. That it was definitely very interesting. Always getting those type of application because they had different requirements when I worked for a bank, when I was underwriting. So yes, so you can do a little mix and match. That's always, what she said isn't bad at all. But I just want you to know, because you don't have that, that doesn't mean that you won't have that credit mix. So just just in case if you're in that predicament that you don't have a mortgage or student loan debt, which very lucky, I don't have any. Whoop, whoop. But anyway, back to the video, or not back to the video, back to what I was saying. Yeah, I was like, if you definitely have those different type of loans, you'll definitely have that credit mix. So, just kind of an FYI for everybody.
Brownie points for that. And then the final 10% is really based on inquiries or new applications for credit. So I tell people all the time, don't apply for credit unless you really and truly need it, because you don't want to have a whole bunch of inquiries that are lowering your credit score unnecessarily. A hard inquiry where you're actually applying for a loan or for credit, it stays on your credit report for 2 years and it counts against you.
I want to touch on something on from an underwriter perspective. So when we see inquiries, um to us really well, at least to me, because it really just depends on underwriters. Some are a little bit more lenient and then others are a little bit more stricter. But anything over five for me inquiries that I see a person has been doing, I know they're shopping around. And then, if they're definitely having more than five, it's definitely telling me that, they're kind of like desperate for credit. So it looks like people aren't approving them. And also, the credit report will tell us why these people aren't approving them and what kind of and kind of almost guess what type of loan that they're applying for. So that is something to know when you go into the underwriting process. Don't have so many inquiries when you are applying. For me, if you have, obviously, the less the better. If you have less than five, you will be okay. That's not a lot of inquiries. Where I start seeing it being excessive is when you have more than five, because then there's an underlying issue that is happening when you've had five inquiries but no one has approved you. So yeah, let's get back into the video.
You for the purpose of your FICO score for 12 months. So I tell people, once you know the 5 primary factors that go into your credit score, your payment history, the amount of debt that you're carrying, the length of your credit history, the mix of credit that's found in your credit files, and the number of inquiries shown on your credit reports, you can manage your behaviors appropriately and you can achieve perfect credit too. One final message I'd like to leave people with is really a sense of hope and inspiration when it comes to.
All right, we'll stop there because also she's not gonna go over anymore. But she's saying what every other credit repair, money coach, financial coach says, which for me, I am tired of hearing this. Like, I want to hear more information instead of all the information. But to me, then I think about how good it is that this keeps being repeated, because the more people that see it, the more people understand and just drill it into your head. This is what the foundation of what matters. Beyond that, it's still a mystery. Some other people know, some other people don't. So it's just like, okay, I get it. I get it personally because again, I understand what it takes to get approved for a loan. It's not because I'm a loan underwriter and I know what banks look for. But yeah, it definitely wasn't a bad video. It's definitely good. Always hammering down the foundations, but let's hop into this next video.